4 investment strategies that any investor can use. Guys, there are 4 different ways that I want to share with you today. Of course, there are different investment strategies and way more than just 4, but here are 4 simple ones that you can begin applying to your investment portfolio no matter at what level of investor you are. If you're a professional investor, you can still use these strategies. If you're a beginner investor, you can definitely use these strategies to help guide your investment strategy and help guide your creation of your investment plan. It's very, very important to have a specific strategy that you're using before you start creating your investment plan. Alrighty guys, let's jump right in. So number 1, this is the buy and hold strategy. The buy and hold strategy is basically buying an investment and planning to hold it long term. So for example, if I believe that in the future I can buy gold for a higher price than I can buy it for today, if I buy it for $1,700, and this is spot gold that we're talking about, an ounce of gold is gonna be 1,700-ish US dollars today. If we buy it today, and I believe that the price is gonna go up to $2,000 or $5,000 or $10,000 per ounce, well, that just means that I'm gonna hold on to this investment, right? So I'm gonna buy and hold it for the next 3 years, 5 years, 10 years, and preferably I'm gonna plan to never sell it. If I'm bullish on gold, for example, and I believe that gold is gonna continue going up and up and up and up, and it might experience some bear markets, right? It might come crashing down. But if I believe that in the long term, it's going to continue going up and up and up, and generally speaking, it's going to end higher than it is right now, right? So whenever that ending point is, 20 years, 30 years, 50 years, right? If I believe in 50 years, gold is going to be higher than it is right now, well, that's a good investment then I'm just going to buy gold and hold it. And so what I can do if I need access to cash, let's say I doubled my money on this investment or I got 10x my money, what I can do is I can just pull out loans against this value. So instead of me selling my gold and incurring capital gains, what I can do is lend against those assets. So I'm buying an asset that I believe is going to go up in value, and I'm holding it for a very, very long time. And so at a minimum, you should be planning to hold these investments for at least 3 to 5 years. If you're not buying something that you believe you're gonna hold for 3 to 5 years, it's probably not a buy and hold situation, so it would not apply under this strategy. So this strategy is really, really meant for some long-term stuff. I can buy a house, and if I plan to never sell that house, that's totally fine, because guess what? In 10 years, my bet is that it's gonna be worth more than what it is today. And that's just due to basic supply and demand. And so based on that fact, I could just buy and hold this asset, and in 10 years, I'm just gonna take a loan out against it. Maybe I built up $50 million in equity over the next 10 years. Okay, that's great. Well, I'm just gonna take a loan out against that, right? So I take out that loan, which is untaxable income, by the way, and I use that money to invest into something else. It doesn't matter what I use that money for. I could use it to pay my bills. I could use it to do whatever. It's definitely applicable. I definitely use that strategy in some assets. I do that with Bitcoin, for example. I buy and hold Bitcoin. I don't really see the value in day trading it too much. I mean, you could have a profitable strategy day trading it, and I've tested some strategies personally, which has been very, very profitable for me. But at this point in time, in 2022, my preference is just to buy and hold Bitcoin. And if I need to access capital, I just take a loan out against my Bitcoin. Number 2, this is called buy the index. I know this is a very, very traditional investment strategy, which I'm usually against traditional investment strategies, but I have a little variation of this strategy. Normally, the strategy is called buy the index, right? But what if you create the index? What if I just created my own mini index out of the assets that I'm investing into, right? So what if I want to create a real estate index? Well, that's great. I could start buying properties. Maybe I could buy Florida, South Carolina, Texas, or all these different states. So I'm building up, first of all, different types of properties, right? So houses, condos, apartments. I'm also buying in different locations. So I'm diversifying that sector of my portfolio, and all of a sudden that becomes an index. That is basically like an index that you can invest in the stock market. Obviously they're usually a little bit bigger and way more diverse, and it's usually a stock index. So you're investing into the performance of like 500 stocks or something. Here, it doesn't have to be 500 houses. It could be 50 houses. It could be 5 houses, but it still becomes sort of like an index. index. But obviously the more houses that you have and the more quality investments that you have in that index, the higher likelihood that it's going to perform really, really well. We want to create these indexes, and this is something that I also do personally. I create these indexes within my own investment portfolio. Well, 25% of my investment portfolio could be considered to be invested in a real estate index that was created by me. So that allows me protection from any sort of losses, right? If 1 out of 50 properties underperforms, it doesn't really bother me too much. Secondly, I'm also in that index containing those properties that are outperforming the market. So maybe my properties in Florida are doing twice as good as all the other ones. Well, great, because first of all, I captured enough properties to protect me from the losers, but second of all, I captured the huge winners. And so overall, that sector of my portfolio is doing well. Investment strategy number 3 is dollar cost averaging. And this is a super easy way for us to take advantage of what's going on in the market. All you really have to do is decide on 2 things. Number 1, what is your buying interval? And you have to stay consistent. So if you're buying every single week, you have to buy every single week. You can't skip a week. That ruins the math. You have to follow the steps of math. It's a very logical process. If you say you're gonna buy every single week, then buy every single week. If it's $5,000, it's $5,000. But just make sure you can commit to doing that every single week. But guys, it doesn't have to be every single week. It could be every day at 12 p.m. Or it could be every day at 12 p.m. and then at 3 p.m. and at 5 p.m. But every single day at 12, 3, and 5, you're making that investment. And what that does is it puts the math in your favor by giving you multiple entry points, multiple buy points. You have 3 buy points every single day, and you're doing that over and over and over again. So over time, it doesn't matter when you're buying, because over time you've built up a really nice position where a lot of the times you're invested at a much better price than the majority of the market, because they're all chasing the highs, but you've been investing even when the market was bad. So that's one little caveat. Even if the market is bad, you still have to do it. There are no cheat days. This is not a workout. This is investing. So make sure you keep your investment amount consistent and also the investment interval consistent. And number 4, guys, this is my favorite style of investing. It's called income investing. And so income investing is basically investing into things that are going to produce some sort of cash flow for you. A lot of people see this as like dividends. So traditionally, it's always been like, hey, let's invest into this stock because it's going to give me dividends. And that's cool, right? There's nothing wrong with dividends, but me personally, I would rather get paid more than what these dividends are offering. I'm being a little bit more strategic on how I'm allocating my assets. You can experience a capital loss with income investing, but if you're being strategic about it, you can invest into things that are going to create passive income for you month after month after month, year after year after year. So you have to be really strategic with your income investing. Make sure you're investing into things that are going to have a significant chance of outperforming the market, first of all, but second of all, have a consistent track record of providing this cash flow, because over time, you're going to want to use this cash flow as your living expenses. You never want to spend your active income on your living expenses, but if you've generated enough income investments to where they're paying you maybe $10,000, $20,000, $30,000 a month in passive income, well, now you can start tapping into that to create the lifestyle that you want. Guys, hopefully all this makes sense. Make sure you like, comment, and subscribe, and I'll see you all in the next video.